Customer experience, I think, is the core of the competition over the last maybe 10 to 15 years. Right? It became more and more obvious that this is the only differentiating factor.
Customer demand and customer experience is definitely at the heart of this explosion of interest in bank as a service.
User experience is now becoming the new basis of competition for banks and financial services.
Financial services is very personal. It is one of the most important things that people think about in their daily lives. And so when you have a connection with people on that level, you can drive the kinds of behaviors that brands want, and you can certainly bring loyalty and retention benefits.
And it's becoming more expected and accepted from their customer base to access financial services through brands rather than having to go and get, say, a separate loan product, from a more traditional, shall we say, provider.
We believe that that's why, in many ways, a lot of the banks are trying to move over to modern infrastructures, because to compete, they just need to deliver a much more effective user experience that 10 years ago wasn't even possible for a whole range of reasons.
Now, I think we're seeing a great debundling where you can go online, you can find the best rate for a specific loan, and you can find the best checking account, and you can find the best credit card. And those might all be from different providers. And I think we're seeing an exciting new rebundling that doesn't look like traditional banks, and it's better suited for people's modern behavior. Taking auto and home loans used to be one of your main financial services. Today, people are doing that less. And really what they need protection from scammers. They need to have control over their money. They need transparency around where their money is, and they need it to be really easy to transfer to other people. So they need a different set of needs. So I think what we're watching in real time is we're watching financial services be unbundled. Different players come out that specialize in different pieces. And then you've got consumer-facing brands like Chime that are creating better bundles for a modern consumer.
One of our partners, Chime, they offer a debit card, and you might think that, well, everyone offers a debit card. What could be so special about Chime? One of the features they've gone to market with that has been very successful for them is access your deposit 2 days early. And for their specific customer base, that's a very appealing feature. So it's really about curating the set of products and features within those kind of larger product groups that are well tailored to the demographic that you're targeting.
Customers fundamentally drive all change in markets, and customer expectation has fundamentally changed.
I guess it's chicken and egg in the end, because it's driven by customer demand, but it's also driven by the possibilities of technology, right? Like, look back, when I started working in the bank, like first time, like 20 years back, tech was, oh my God, like there was nothing we could do to be anywhat specific to a customer. Like the best thing we could do was put different color on the debit cards. And we were very proud that we had like debit cards of 3 colors. As of today, you can do anything.
Steve Jobs would say you can't ask people if they wanted an iPod because they didn't know what that was. It's really companies reimagining the kinds of experiences they want to create for their customers. When you think about what Uber did to paying for a taxi cab. If you get into a London cab now and have to, pull out a wallet and pay for something versus it's so seamless to just walk out of that Uber and it's just done. In a sense, it's making financial services invisible and realizing that embedded financial services can make a lot of that possible.
What we've seen in Asia, for example, is the emergence of these super apps where in some ways customers don't even face this choice between, do I split my money out or do I keep it all in one place? Actually, those super apps have branched out into so many different areas of customers' lives. So there's all sorts of things that have come together in Asia, which are possible in the Asian market. At the moment, we haven't seen that happen in other markets. I don't know if it's going to go that way, but it would make sense to me that actually customers want that convenience, they want that ease of access. If they can see players coming out there that have the ability to deploy their money for them into lots of different areas of their lives in a way that is fast and effective and convenient and enables the outcomes that they're looking for, then, personally as a customer, I'd be really interested to look at that for myself.
I think in a lot of cases, people don't even realize they're getting a financial relationship. I think what they see is easier interaction. I use my Apple Pay on my phone all the time now. Do I think I've got a banking relationship or financial relationship with Apple? No. And I think a lot of people, they just don't even realize they're entering into a financial relationship. You can end up in situations where people buy a product thinking they literally just paid for a product on a pay later basis, and not realize they're actually financing that themselves, or they're party to a finance relationship. Does it matter? Well, in the good times, no. When the bad times hit and things go wrong, yeah, I guess it does matter, and that's when you find out. But at the moment, we're in relatively good times from a customer perspective.
The big question being, whose customer is the end customer? And the answer is, there's no one way to do it. For instance, in case of Apple and in case of Goldman Sachs, Apple is essentially just redirecting the customer to Goldman Sachs. But Goldman Sachs makes all the decisions around credit underwriting, makes all the decisions around who gets the Apple card. So there's no one size fits all here. I think there are multiple ways to be able to partner. In some cases, the partnership is so deep that it goes all the way to the end customer, while in other cases, the partnership is more so focused around the fintech company and kind of like the fintech company owning the end consumer. And I think we're going to see both of that happen for a good period of time. I don't think one kind of wins out over the other.
The players in the back end do not need to be invisible, but I think the brand really has the relationship and has the deepest understanding in terms of what the end customers actually want out of that relationship. And so, you use the example of the Apple Card and the Goldman Sachs partnership. To some extent, maybe some end consumers are comforted by the fact that, Goldman's backing the Apple Card, hence they're opening a card. But I do think, most of the engagement is because of Apple. The reason they're opening an Apple Card is because of Apple, not necessarily because it was Goldman Sachs. And so, as a banking as a service platform, we will partner with kind of pre-qualified, bank sponsors, such that they have the trust and the reliability that end consumers want.
In certain cases, I think consumers will feel better when certain parts of their experiences are associated with multiple brands, right? And so, for example, for us, I think in many cases, we've seen customers feeling much better when they see that Plaid is involved in the data transfer, because they've seen us before, they trust us. And so they know that we're going to be safe, secure, transparent about how we share their information.
But ultimately, the branding and the engagement is really done by the brands and the fintechs. And obviously there's disclosure around who actually is in the back end, but for the most part, consumers don't really care. They want to get the use case and they want to get the product that they want.
The companies want to own the relationship with the customer. So when it does go wrong, when one of these BaaS suppliers goes bust and you're not able to deal with it. So Wirecard recently, a lot of fintech companies suddenly had lost the ability to make payments, because what it should have done in a proper BaaS platform is you should have been able to switch out that Wirecard infrastructure very quickly and move to another supplier. But that is a good example of where the loss of someone at a relatively low level of the stack that most customers wouldn't have heard of has had a massive impact on multiple providers. I think in the future, where it is almost ubiquitous to be able to mix and match these different BaaS layers, things like a Wirecard won't have as much impact directly.
One could argue that through having the multiple specialisms, we are more able to respond to challenges than actually providing the whole thing in-house. And a great example of what the end customer experiences can be shown in the FCA report each quarter of number of incidents reported by each bank. And if you look at Starling Bank, they're topping the leaderboard in having had 0 incidents in the past, I think, 18 months. And, that compares to, the numerous problems among many other organizations. And, those organizations have got all the capabilities in-house, but, they aren't necessarily geared up to respond to issues in an SLA time that, avoids having end cardholder impact. Whereas for organizations such as myself, where availability, uptime, reliability is the lifeblood of the company, it's, the reputation on that side is absolutely everything, then, everything goes into it.
In a digital world, User experience is how you earn trust. It's how you show consumers you understand them. Whatever that app is or whatever that service is meets their needs. And if you don't have that user experience, people are gonna attrite. They're not gonna feel comfortable using it for their financial transactions.
Like imagine you're buying, anything, right? Like a bike. If that checkout process for buying the bike is super convoluted, right? It's literally gotten to the point where some customers will start asking themselves, wait a second, if they can't even figure this out, like how good and safe is this bike going to be for my kid to ride on? And so that then has an impact from a brand perspective and everything else. And so you either create the experience like at least in line, but ideally better than the expectations that customers have, or you risk them not only thinking poorly of your checkout experience, but actually fundamentally thinking poorly about your brand and the core products that you're trying to represent.
I think the demand for instant gratification is because we live in a digital world today, right? Everything's accessible. You can book something on Amazon and it's there, in some cases within hours. So why shouldn't that apply to all other industries? So I don't even think it's becoming nice to have. I think it's a core expectation of consumers of tomorrow.
Obviously, there are some great examples of ecosystem players like Shopify who are really kind of challenging this space and not thinking about how do we launch a series of financial products or financial services, but how do we take a customer audience and think about all the types of things that they need to do and need to achieve, and then work back from that to think about what financial support might they need. The journeys that they are designing aren't financial journeys. They're journeys about starting a business, understanding your cash position, working out where you should invest next. They're not get me a loan, get me an account. It's really much more customer focused than that. And I think that's going to start a trend that's only going to accelerate over the next couple of years.
I definitely think the banking as a service paradigm enables a much faster kind of go-to-market motion for players in the space. And the faster you get to market, the quicker you can iterate around what you're seeing from your customers and better tailor that experience to what they need.
Not having to build things from scratch means that you can try new things. It's generally configuration only. No one's actually writing code. And so it's tried and tested internally, as in by the platform providers. They know that functionality is going to work right first time. So it's for the brands to go and take it to market, test the price points and see what works.
The ultimate benefit to the customer is better experiences, but brought to you by your favorite brands. The ultimate benefit to the brand is the ability to drive deeper engagement with their customers and potentially generate new revenue. The ultimate benefit to the underlying banks, however, is potentially removing some of their costs.
And so I still think there is like a desire on customers' part, right, to have one primary relationship. How you deliver that and how you deliver kind of all the necessary solutions underneath that umbrella, I think that's where the evolution is. There are a lot of new entrants that are coming into the space, right? It could one day be Google or Amazon or Apple. Those are all players that are moving in this direction.
I think that battleground of not just building better customer experiences, but understanding customer contexts, understanding why finance needs to show up as part of a broader customer journey, as part of a broader set of customer jobs to be done. Customers think differently to, I would like a financial product. They think about, when will I be able to afford a home? How should I redecorate my house? Can I even go on holiday this year? When can I see my family again? By understanding those problems, you can start to think about where finance fits inside of, how will I start a business? How do I run my business? And embedding finance like that I think is the key to understanding where to go next with customer experience.